Today, we're tackling a hot topic in Ghana's real estate space: the promise of high returns on apartments in Accra. Now, if you've seen the billboards or glossy brochures, you probably noticed a recurring pitch: buy an apartment and enjoy at least 10% return on your investment. Now, you see that developers package these homes or these apartments as cash cows. And the idea is very simple: you buy, you rent it out on maybe short or long-term basis and watch the money flow in. But then here's the big question: are these returns very real, or is it just clever marketing? Today, we're looking at the numbers. We'll look at both short-term rentals like Airbnb and also long-term rentals to see if a 10% return on investment is realistic in Ghana's current market, or if it's just a sales pitch that developers and real estate marketers and also agents are using to sell units. First, let's talk about the promise. Now, in many brochures and property campaigns, you'll see that developers will pitch apartments as investment vehicles. They'd say maybe buy for $100,000 and earn 10% returns annually. And that translates to $10,000 every year. But real estate investment doesn't just depend on the purchase price of the property. It depends on occupancy rates, rental demand, running costs, management fees, and sometimes even the strength of the city. And when you dig into the numbers, you realize that the picture isn't always as glossy as the adverts and marketing campaigns portray. Now, let's start with short-term rentals. Accra has a growing Airbnb scene, especially in prime areas like East Legon, cantonments, Laboni, Upper Residential, and others. But then here's the reality: average occupancy rates hover around 40 to 55%, and that means that your apartment is empty almost half the time. And even when it's occupied, the nightly rates will range around, let's say, $60 to $150, depending on the neighborhood and the quality of your unit. And now that we're in off-peak season, some apartments can rent for much lower. You can get decent options for about $40. So let's do the math. Now let's assume that you bought an apartment for $100,000. And let's say you're charging $100 a night, and then you hit an occupancy rate of about 50%. Now, that's about $18,000 gross per year. Looks good, right? But wait, now you have to subtract your management fees, your cleaning fees, utilities, repairs, and even service charge of the apartment, and any other cost that may come up. And if you're relying on agents to rent out your units, you'll have to cover their commission, which often ranges between 8 to 10% of the total cost of rental. So you may be left with maybe $10,000 to $12,000 out of the $18,000 net. And this is even on conditions that things go very smoothly. So yes, you can hit 10% return on investment, but then this is in a best case scenario, and most of the time, many people will fall short of the best case scenario. Many owners are likely to get closer to maybe between 5 to 7% after all the deductions are made. Now, let's flip to long-term rentals. If you put that same apartment on the market for a 1-year lease, and let's say the rent in Accra range from between $1,000 to about $3,000 a month for a decent to a high-end 2-bedroom apartment in a prime area like East Legon, I mean, you know, the usual hotspots. On the high end, that's about $30,000 a year gross. But then again, remember that the apartment costs at least $250,000 to start with, and it will often cost much more in other areas, and normally depends on the kind of project you are investing in. And beyond the cost of the property, you still have to cover the service charge, the maintenance of the property, agents' commissions, and potential vacancy periods that, you have to contend with. And in reality, most landlords are seeing between 4 to 6% return on investments annually on long-term rentals. So then, why do developers keep pushing this 10% figure? Well, it's partly psychology. You'd see that a 10% return sounds way better than, let's say, 4 or 5%. And in a marketplace where buyers, especially desperate buyers, are looking for passive income, the 10% pitch is more of an easy hook. But then it doesn't always translate or account for the realities that are in the marketplace. Now, this by no means implies that there's some sort of deception going on. No, the 10% figure is often a perfect case scenario. And as we all know, life is not perfect. And you see that developers often calculate their return on investment based on ideal conditions, such as full occupancy, no maintenance, no issues, and also premium rental rates. But as we have seen, the realities on the ground are quite different from what the sellers or the developers will normally market. So what's the lesson here? Should you avoid buying apartments in Accra? Well, no, not at all. Now, real estate is and will always be a solid investment, especially if you're in it for the long term and if you end up buying in a very good location. But then don't go in blind. If you're buying for investment, you need to run your own numbers. Don't just take the 10% return on investment promise and run with it. Ask questions. Ask about the realistic occupancy rate in the area you're buying in and also what you can expect in the project you're investing into. What are the service charges? Who is going to manage the property? Will it be the same company that manages the entire complex or will it be an agent? And what happens if your rent has to drop in order to attract tenants, either in off-peak seasons or just to prevent the unit from being empty for too long? Because at the end of the day, the difference between 10% return on investment and 5% return on investment could be the difference between a profitable investment and a frustrating one. So the next time you see a glossy brochure which is promising guaranteed returns, don't just take it at face value. Do your homework, run the numbers, and understand the market. That is how you make smart real estate decisions in Ghana. And this is why we started Ghana Ground Up in the first place, to serve you facts and to bring you up to speed with the realities in the real estate market in Ghana. Thanks for tuning in to today's episode. If you found it insightful, you found it useful, share it with someone who's thinking of buying an apartment in Accra or anywhere. And don't forget to subscribe for more deep dives into Ghana's real estate market. I'm Desmond Kafui, and this is Ghana Ground Up. I'll catch you in the next episode.